Hello and welcome to this week's BizSmart Lunch and Learn webinar. Our weekly webinars are aimed to provide advice and share knowledge amongst business owners. And if you would like to keep up to date on our latest webinars, please make sure you follow us on SlideShare or subscribe to our YouTube channel. You can also access all of our resources for business owners by downloading the BizSmart app. Our host joining me today is BizSmart Select member Simon Cook. Thanks, Simon. Over to you.
Okay, thank you, Carol. So, good afternoon, everybody. This is my second edition of the Top Tax Tips. So, just following on from the last webinar, there's been some updates, and there are some other things that didn't get time to cover in the time. So, yeah, I'd just like to run through some more ideas and tips that we might have. So a thing that's going around the press at the moment is all about the Childcare Vouchers scheme. The government was actually looking to stop that on the 5th of April. But what they've done, they announced on the 23rd of March that they'll be extending it out until October 18. So if you're an employer and you've got employees where you want to give them the benefit of having tax relief on sending their little ones to nursery, then they can still enrol for it up until October 2018. Like I say, this is a fantastic way of offering your employees an extra benefit without costing you anything. So what it's doing generally is you're paying for the nursery fees, you deduct it from their salary, but because of the way it's deducted, they don't pay any tax on it. So a great little incentive. So if you know anybody or in your own business who are sending people to nurseries and paying for childcare, then typically you can contribute up to £245 tax-free, which could potentially save your employees £80–90 a month on their nursery fees. Okay, thank you. Claiming the employment allowance. Now, this has been around for a while, but for any of you guys that don't know what this is where HMRC are trying to encourage businesses to employ people. One of the main reasons a lot of companies opted to put people on subcontract instead of employed is because they would have to pay the extra employer's national insurance. Now, what we've come across lately is a lot of new businesses where we're taken on the payroll and the box hasn't been ticked to claim this allowance. So what this actually means is if you're employing people, the first £3,000 in employer's national insurance you don't have to pay. There is an exception to the rule now, however. If you are a single director, one-man band limited company or a one-man band company, then you can't actually claim this. You've got to have more than one employee in place. But if we come across anyone that hasn't claimed it, we can go back and reclaim it up to 4 years, getting people £15,000 back, which is what we have recently done for a nursery that we took over last month. Okay. Research and development. A lot of people might have heard about this or come across it and think it's like a bit of a dark art or a technical science. But to put it simplistically, if your business is researched or developed into bringing out a new product or something new that no one's done before, you can actually get tax relief, additional tax relief at the end of the tax year for your business. The way it generally works is where you can prove you've spent money researching and developing a product or a service, you can double claim that expense on your accounts. So, for example, if you paid a research company £10,000, when you come to do your corporation tax, you can actually claim 23,000 because it enhances it by 230%. So, this is a great significant saving, and you can do this retrospectively as well. We've done this for 3 or 4 clients and managed to get them some more corporation tax back. So that's the research and development allowance. Claiming capital allowances on fixtures. If any of you business owners are looking to move offices or particularly purchase new offices, What a lot of people don't know is when you're buying the offices, there is something by where you can claim some of the cost of the building is actually fixtures and fittings as opposed to the actual shell building itself. The reason why this is significant is that you can actually offset the value of the fixtures and fittings against your tax, basically. If you buy a building, you can't offset that against your profit all in 1 year because it's a capital large building. However, whatever you say is the fixtures and fittings part, you can most definitely claim. So again, it's something to consider when you're buying a property or knowing anybody moving into a property, to think about. Just a little update on the tax bands and allowances for next year's, guys. Shareholders in limited companies that are taking out dividends, they're reducing the £5,000 tax-free allowance down to £2,000 from the start of the 6th of April 2018, the start of the next tax year, which basically means that your first £2,000 of dividends will now be tax-free, and the rest will be taxed at 7.5% or 32.5% if you're a higher rate taxpayer. For people that earn over £100,000 a year, the personal allowance starts to get withdrawn. So for every £2 over the 100,000, you lose £1 of your tax-free allowance. And one thing that a lot of people don't know about, which can save you 200 or 300 quid a year, if anyone's got a partner who's not earning up to their £11,500 a year, you can transfer 10% of their allowance to yourself. And if you're a higher rate taxpayer, that's going to save you potentially, £400 a year. So if you've got a partner that's not working, or they're only working part-time and not using all of their 11,500, apply for something called the marriage allowance. So, it's definitely worth looking at. Tax thresholds. So from next year, you can earn 11,850 tax-free. So going back to my point before, if you've got a partner that's earning less than that, potentially you can have 1,185 of that moved to yourself, enhancing it. After you've taken off your 11,850, you can earn an extra 34,500 and pay the basic rate of tax at 20%. Anything over and above that is 40%. And then if you earn more than 150,000, there's an actual additional rate of tax, which is 45%. Just some other little tips for people to think about. Make sure you claim for using your home as an office. A lot of people don't do this, especially if you've got business owners who have a dedicated room in their house for it. I know HMRC would recommend that you claim up to £4 or £5 a week. However, I would consider enhancing that if there's a special designated room and you spend most of your time working from that room in your house. Rent a room relief. If you've got a spare room in your property and you want to rent it out to a lodger, this is actually tax-free. So you can rent out a room in your own property to somebody else up to £7,500 a year tax-free. So it's not actually treated as rental income when it comes to doing your set of council tax return. Again, it's just an incentive from HMRC to get people to utilise the space that they've got. So it's a good one, especially if you, for example, might have a a posh shed at the bottom of your garden or something separate. It's a great way of getting tax-free income. Just on the subject of properties, transferring of assets. So again, this is taken into account when you've got partners involved. If you buy a second property and you're a higher rate taxpayer, what a lot of people miss is that if you put half of the property name in your partner's name, then effectively 1/2 of the profit will be taxed at a basic rate. And therefore, instead of paying it all at 40%, you can pay half of it at 20 and half of it at 40. if you've got a partner that's not using all their 45,000 a year basic rate band allowance. So consider that when you're looking for a property, get it in joint names. Just covering a bit of ground from last time in case you weren't on the other webinar. Biggest tip again is too many sole traders should really be set up as limited companies. Even though there's still dividend tax, it's still a lot more advantageous being a limited company for a number of reasons. The biggest one is not paying tax on account up front. So when you're a limited company, you pay the tax 9 months after the year end. Any of you people that are sole traders will know, come January, they'll want the full tax bill, a payment towards the next year and another payment in July. So it's better for cash flow purposes as well. So basically I've just covered that. So the other thing to note about payments on account, is if you're self-employed and you're paying on account towards next year, if you know that you're not going to earn as much, you can actually request to reduce those payments. So again, if you've had an exceptionally good year, but you've just won one big off contract and you know you're not going to get that next year, effectively you're going to be paying tax up front based on that good year. So what you could do is reduce those payments in January and July to say, look, I'm not going to earn as much next year, so I'd like to reduce those. Okay, another good one, I know it's obvious, but people still don't do it. Probably one of the most tax efficient ways to extract money out of your company, especially if you're limited, is to set up a pension scheme that your company pays for into the director's private scheme. What it does is it goes through the accounts as an expense, reducing your corporation tax, and it puts away to you for your director's future into their pension scheme. Okay, and that's really it from the update. Just a few more tips in there that weren't in there last time. If any of you guys want to know any more in detail about some of the points I've covered, then you can come in for a consultation. It doesn't cost anything, or you can give me a call to chat through it in more detail. And that's it.
Great, thank you very much, Simon. You've got some questions already waiting for you.
Okay.
The first one is from Sarah, and she says, please could you explain a little bit more about how the childcare allowance can help my small business? Okay,
so what a lot of people don't know is if you're a small limited company, you don't have to actually subscribe to what we call a registered Childcare Voucher scheme. There is another option by where you can make an arrangement with the nursery, so this doesn't cost anything, where the limited company will pay an agreed fee for the whatever the childcare is, up to the 245, and all you do is deduct it on the payroll from the staff as a gross deduction, so you don't have to actually register for anything. The childcare voucher scheme tends to be in place for multinational companies or big companies that have lots of people on the payroll. So instead of paying lots of different nurseries, they just purchase these vouchers that can be used at different nurseries. However, when you're a smaller business and it's one or two people, you can just make a payment to the nursery direct. Most of the nurseries will let you do that. So, instead of paying an intermediary to sign up to these voucher schemes, you can just do it all direct.
Great, thank you very much. You got another question waiting, and this one is from Paul, and he asks, have you any examples of the R&D tax credits and how it works?
Yeah, of course. So, like I said in the slides, the R&D is about where you've researched and developed something, and without naming the client, obviously, I had a client that was developing some new software. It was all based around search engine optimization, and basically all we had to do was prove that he was testing something that hadn't been done in the market before. And basically what you do then is we make a notice and register with the R&D unit in Leicester that we intend to make a claim. You and the client together sort of put together a sort of, how can I say it, a sheet of where you're saying there was uncertainty and you've researched it and it's new in the market and you'd like to claim the expenditure. If you get a letter back saying it's accepted, you put it through on the next tax return. So if you're in an IT business or software business, this is where it's most popular, because people are always developing apps and software, and it tends to be around those type of businesses. So yeah, that's an example of how it would work.
Okay, great.
Okay.
Thank you very much. Thank you again, Simon, for hosting today's webinar. I will be sending out a copy of the presentation and Simon's contact details out to you all shortly, so please do email him direct if you have any further questions. But before we close, just a quick reminder, if you would like to keep up to date on our latest webinars, please make sure you follow us on SlideShare or subscribe to our YouTube channel. And you can also access all of our resources for business owners by downloading the BizSmart app. That's the end of today's BizSmart webinar. Thank you all for listening, and we hope you can join us again very soon.